there was a big rejection, right? So there is a little chance that there could be the same kind of big rejection. So we're going to play off of that. Let's see here. So our stop percentage risk is going to be 1% risk. Stop is going to be around 15 pips. And take a buy over here. Got stop right down there. Oh, need a bigger stop loss over here. Buy, perfect. Awesome. And target is up over here, and away we go. Let's take a look at the 15-minute here for a little bit. 15-minute is making higher highs and higher lows. 30-minute candle is bullish, so there's a high chance for the next 30-minute candle to continue going bullish. Plus also we're at a very, very strong support too, so it should make sense. All right, so we're slowly moving and grooving over here, and oh, nice, we're moving. So if you see our P&L, if you see the pips over here, we're moving here. 30-minute candle is bullish. As long as this candle stays bullish, the trade should be good to go. So first of all, what we need to do is we need to make sure the stops are below the candles. Right there, and that's about it. If this candle breaks the low of the previous candle, then, this trade is no longer valid. So just basing it off of that. Ooh, looks like it's coming down hard. It's coming down. And it's about to close. 30-minute candle is about to close in 3, 2, 1. 30-minute candle closed. Let's take a look at the 15-minute candle. 15-minute candle tried to come down, but it left a rejection. 1-hour candle. Now, if you look on the 1-hour candle, the 1-hour candle, it hasn't broken the low of the previous 1-hour candle, right? So based on the high time frame, which is the 1 hour, it hasn't broken the low of the previous one for the first half hour, so it just makes sense for the next half hour, the 1 hour candle should continue moving bullish. So that's the idea here in the trade. So we're going to wait for the 1 hour candle to close, and if it moves bullish, perfect. If it doesn't, then we're going to get stopped out. Oh, position got stopped out. So that was uncalled for, actually. I mean, it shouldn't have stopped us out. But if it starts to go bullish, we could see continuation here. Oh, I think that stop was way too low. That stop was way too tight. Now we look on the 1 hour. The 1 hour has essentially closed bullish now. Now it's on its way. If it's on its way, it's going to close bullish. The next 1 hour candle should fill this wick up over here. It's moving. We're up 20 pips. We're up 20 pips, and this one should continue up and fill this wick at 145.300. If you look on the 30-minute candle, 30-minute candles are good to go. Yeah, so that was a trade. Here you mainly take profits or do whatever you got to do, but most important thing is you have to put stops at break even. When stops are at break even, you're closing half the positions. Let's say 0.30 is what you secure. Close. And you let the rest run. And that was your trade. That was your trade. That was your trade for the day. Yeah, that was the trade of the day. Perfect. So now we're going to go to our next session. Right? So this is stops are at break even. Now since it's breaking up this area, you start to look left. You see, okay, then maybe this is the next area right here where price might head off to. And after this, price might head off to your next area, which should be up over here around 145, 145.850. Okay, perfect. So let's go to, oh wow, it's just kept moving and moving. Perfect. So we're going to close this right over here, and we're going to go to the next New York session. Okay, so now this is another opportunity where price is going to continue moving up. You see how price broke out of this resistance? It made a high, came down, created like this candle closed bullish. It created a support. So if a stop is below the previous candle, this should continue up, fill this wick, and probably continue up.